Welcome to the World Economic Forum's annual meeting to talk about the India story. Definitely is amongst the brightest spots here in Davos, as well as to talk about the challenges of rising interest rates, rising input costs, and the impact of not just on his industry but across the board. I have with me Sanjiv Bajaj, CII President, as also the head of Bajaj Finance. Thank you so much, Sanjiv, for joining us here. Let me start with a broader question on how India is being perceived right now. We definitely in Davos are the happiest group or the most cheerful bunch, if I can call it that. Uh, what is it that you're picking up from the people you're talking to about the India story?
We clearly are the most visible group over here
There
in
we are.
Davos.
You walk down the promenade and that's it,
Exactly.
right?
Walk down
Yeah.
the promenade, you can see four Indian states there, you can see the main India lounge over there, you can see Indians walking all around, and which is very good because as we are integrating more and more with the world, and we also have this big opportunity to be the manufacturing hub to the world, we have to let the world know we are ready, and then we have to meet our commitments. Um, Davos, as you know, right now in the middle of war, middle of reverse in the liquidity boom of the last 2 years and rising interest rates, the mood is somber.
Yeah.
But by that same account, as I'm talking to people, they are all looking to India as that one country that can step up and in a number of sectors become the manufacturing hub for the world. Initially, it may be India, it may be China plus one, but over the next decade, there is no reason why we should not play a stronger role. There are a lot of things to be done. I believe the government's focus through the PLI schemes, cutting of corporate tax, ease of doing business. There are steps that the government has taken. Unfortunately, we know that the external environment has been playing truant. The good news in the last couple of quarters is that a number of sectors in India are seeing an uptick in the private capex cycle. So not just commodities, which you would expect, but chemicals. We are seeing it in real estate and construction. We are seeing it in logistics. And as long as we can tame the inflation on the ground in India quickly enough so that we get our consumption, our domestic consumption engine roaring again, you'll see more and more sectors investing, bringing our economy back to a reasonable level of growth. As you know, as CII, we are projecting growth in this coming year of between 7.4 and 8.2%. But a lot depends on inflation, on some of these external factors as well.
Speaking of inflation, we've just seen two quick steps taken by both the RBI and the government. First was the out of turn rate hike, and second was what we've seen them do with regards to both the fuel duty cut, which was one of the sort of requests that CII had made as well, and the second was tamping down on some of the metal prices through export duties. How much more do you think needs to be done for this fight against inflation in India specifically to be more effective?
See, the two areas that inflation hurts the common man, one is fuel prices, as we talked about, and the second is food prices. Food, we've seen in some selective items, food has gone up in India. We are hoping for a normal monsoon. That's the forecast right now. If that happens, at least food comes under control. You know, vegetables, fruits come under
Sure.
control. As far as oil is concerned, it's a factor that is beyond India's control when 85% of your oil is imported. The government has taken proactive steps. It is pushing the states to do that as well. They have some area to maneuver within which we are seeing these price cuts, and this will clearly help. Beyond that, a lot depends on where oil goes externally, and that's where I believe that like-minded countries like India are and should be talking to the producers of oil to see that it's not only about short-term gains; it's about balancing global needs.
That's a long haul. How much further do you think interest rates are going to have to rise before they stabilize?
We are about 70 to 80 basis points below where we were pre-pandemic.
Yes.
So I think a normalization of rates to that level should happen. It will temper to some extent demand and hence inflation, but we must keep in mind that a large part of the inflation is on the supply side. So what you don't want is very aggressive rate hikes beyond that, because then you may get into the danger of both slowing growth without getting proportionate inflation down.
Yeah, fair enough. Um, Before I get into the specifics of your business, Sanjeev, um, broad impact of all of these factors on the finance business, both inflation, rising interest rates. How do you assess the next 6 to 12 months?
So the finance business has come through the last couple of years stronger, more digital, and we are seeing now loss ratios better than pre-pandemic levels. Um, we are far more efficient through all the process re-engineering and the focus on digital technologies that we have driven over this last 2 years. We've used this as a window of time to just rebase ourselves, rip our processes apart, and create more efficient ones on a new technology backbone. So that readies us for the future. I believe that the possible downside if inflation continues to be high could be slower growth. But from what we are seeing right now, quality of growth should be good. I must say, not only the last couple of quarters, but even the last couple of months, growth on the ground overall is still reasonably strong. Because it also takes some time for the rates to translate onto the ground. So the next couple of quarters will be important.
So far, you're not seeing any slackening in demand?
No, no. We saw some 2 quarters ago in rural, where rural compared to urban had slowed down because the money that's gone into rural India this year is less from the government than the previous year. So it was an obvious expectation. Surprisingly, on the urban consumer side, we've not seen that yet.
Despite the twin effects of inflation
Yes,
and
but
now rising loan rates as well.
correct. So that's why, as I said, normally you see a lag effect of a quarter, sometimes even two. So we are preparing ourselves for that, but we are also hoping that if interest rates come down even a couple of, or inflation comes down even a couple of percentage points, it should hopefully just soften that effect.
You're well provided for, as are many leading banks and other lending
Mhm.
institutions in the country, because as you pointed out, in the last few years, the financial services sector has
Yes.
cleaned up quite a bit in India. Yet, are you concerned about asset quality deterioration on account of small businesses or even individual borrowers hurting because of the twin effects of inflation and rising rates?
Not at this point of time. With the book that we have and our focus on the customer segments, both consumer and SME, we don't see that at this point of time. And
Because you've maintained some of your additional provisioning in
yes,
the last quarter. And I
yes,
was wondering if that's an indicator
that's
or
just being
just you
conservative.
being conservative. Okay. That's just you being conservative. Not an indicator that you see asset
No,
quality or
no,
stress building up in the system
no,
and therefore you wanted to play it safe.
not at all. But at the same time, as you know, we are very transparent with our numbers. Every month you will see our numbers out there,
Yeah.
and so that's why it's very easy to read when things are getting either better or worse.
Okay, fair enough. The other big change that's taking place is the competitive intensity. We saw that play out in your net interest margins of the last quarter. You're going to have to fight to keep clients with you or to keep customers with you. How do you foresee this industry evolve over the course of the next 2 to 4 years? Also, one of the factors will be the HDFC merger. The other factor will be RBI regulations for NBFCs. So, can you paint a big picture for me on how you see the lending space evolve over the next 2 to 4 years?
Over the next, say, yeah, let's take 4 years because
Because
a
this will
year
all
or
take
two,
time. Yeah, I mean, it's not
exactly.
going to all happen in the next 6 months to 1 year.
I
So,
believe with the kind of scale-based regulations that RBI has come out with, it clearly separates the men from the boys. The larger, stronger, better provided for NBFCs have the opportunity to get even better and stronger. And many others, and that's what the scale-based regulation allows. RBI permits you to stay small and to stay within a more simpler regulated environment. So this is
absolutely.
something that each NBFC has to choose for themselves. With Bajaj Finance, we're in a unique position that we take the best of regulations from banks. We are more conservative than we need to be, but we believe that that's how we build a strong, long-lasting business. And at the same time, in almost every business line, we are competing with the best banks in the country, and that's what we continue to do. Our focus on entrepreneurship, high level of empowerment with accountability, innovation. At any point of time, we have 150 different projects going on, and with tremendous ownership by the team. This is what creates a living culture which is reinventing itself all the time. I mean, after the first lockdown, when most people were stuck at home, we had a core team that went to work and said that, hey, this is a point of time that's available to us. Let's firstly look after the safety of our people and their families. So we introduced a set of policies for that. And they said, let's get to work and let's rebuild this company for the next 5 years.
I'm going to talk about some of the steps that you all are taking. But before that, let me come back to this issue of what happens to large
Mhm.
NBFCs. What happens? Because at one level, people are interpreting the RBI guidelines to suggest that eventually NBFCs, the arbitrage between banks and NBFCs, at least the large ones, will have to close. But on the other hand, NBFCs supported by industrial groups are unlikely to get bank licenses. So you're sort of stuck between, you know, a hard place and a rock, right?
Mhm.
How do you navigate that?
Well, some of this is not clear. For example, I don't know of any good quality NBFC from a business house that has applied for a bank license in the last couple of years and has been denied one. Um, I see at this point of time, with the corporate bond markets growing, with the sources of capital available to NBFCs being more than enough for their current size, and with somebody like us with the 2 lakh crore size, if we can continue growing, there's no reason why others should not. Plus, if the HDFC and the bank merger takes place, there's some more headroom that becomes available for other good NBFCs because they'll go out of that NBFC
Space.
space. So I feel that for the next 3 years at least, growth is not a problem. And hopefully, in this period of time, becomes clearer for some of these NBFCs to decide, do they want to try and become a bank? Are they happy being an NBFC? I also believe that this digital world is changing businesses so far
Yes.
that a proper discussion within the banking sector, including the regulator, on what should the future of banking be? What is digital banking? What is physical banking? Is it the same monolith structure of the last 100 years which has not changed? Are we missing something as a
Yeah.
country, as a population, an opportunity? With the right safeguards in place. I don't have all the answers myself, but I believe an important discussion and a paper is required
Hmm.
to help us as a country decide where we want to take banking and banking type of services
Right.
over the next 10 years.
What does that mean for Bajaj, though? Are you guys considering applying for a banking license over the next couple of years? I know you've been asked this question many times before, and you've said no, nothing in the near term. But I still got to
No,
ask,
what I've said,
especially if we
Menaka,
expect
is
new regulations to kick in
yeah. So what I've
October.
said is that we review this once in 3 to 4 years and see that do we have a window of time over the next 3 to 4 years to continue as is, or is it a decision that we need to trigger? And at this point of time, we are still in that window where we can
So
choose to
these
wait and
regulations
watch.
kick in later this year, expectedly, right?
Yes, yes.
And one of the things that you had asked for when you anticipated the regulations will change for large NBFCs was an emergency funding window at the RBI, but that's not going to happen.
So
So a
that, as
lot
you
of
know,
the
happened. As you know, that happened
it
last year
happened
through
as
the
a
crisis.
yeah through the
Now,
crisis, yes, but
now
not as a
as a regular thing, no,
backstop that
no, it's not.
exists. Yeah,
And it is something that we will engage with the RBI as well to say it's that the reason that you want to put something like that in place with the right guarantees. So if RBI is going to provide that, then the NBFC that wants to use that facility must provide the right security to
sure.
RBI. And it's not that you will need to use it. RBI can make it expensive. But the fact that it's available, that there is a lender of last resort to the NBFC, creates tremendous confidence in the market with other borrowers, with the consumer, with somebody putting in money into your fixed deposit. It's to create that confidence that it becomes important. So we will engage with them and see what they say, whether we can persuade them or
So
not.
at this point in time, no immediate plan for a banking
No, no plans
license.
right now.
Okay. Do you see if when these new regulations come into play, any dramatic change in the way you do
No,
business?
not for us.
None whatsoever. Okay, great. Let's talk about some of the things that you've identified as growth areas. I think one of them is definitely the mutual fund that
Hmm.
you're launching
Hmm.
later at the end
Hmm.
of this year.
Hmm.
How is it going to be different? Are you going to be just one more asset manager in a sea of asset managers?
We already manage a lakh crore in our insurance business. So that's already 100,000 crore. So no, we have no desire to be just the 41st or the 51st AMC
Something
in the
like that,
market.
yeah.
So when we launch, you'll hear more. We want to
Surely you
be.
can give me a glimpse of why this is
We are
going to be
building the
very
strategy.
different.
I know it will be a lot more digital than most others. That's one thing I can say. It will leverage the capabilities on data and technology that we have in other companies. Beyond that, we are still working on the strategy, on the products, on the distribution routes.
You're also planning to do credit cards on your own balance sheet or
No,
on your
we
own
don't
book,
we
is
don't
this a
know
no?
that
Or
yet.
because you have right now co-branded cards, right?
We have co-branded cards. We have
So
two
you're
of
not doing an
those,
independent card
and
for it?
we don't know whether that's still permitted or not. So whether RBI's note on that permits NBFCs is not clear. We will check with RBI and see if there's clarity. If we are permitted to, we will apply.
You will apply.
If we are permitted to, yes.
Again, how will you be different in that? Because banks have also gotten very aggressive in that
Mhm.
business. So,
So, we already have 2 million credit cards, and we understand the customer. In Bajaj Finance itself, we work with nearly 55 million customers. We have another 100 million or odd customers in the insurance companies. With the right data privacy and concurrence from customers, it becomes a large pool of middle class customers to offer a range of financial products, including credit cards. And we're going much beyond credit cards as well. As you know, we already have our store card. We have over 20 million of those. Most of those are digital. Um, we are working on our own payment platform. We will launch that later this year as well. And the whole idea is to increase the level of engagement with our customers across payments, across loans, across insurance, and asset management products as well.
okay, so no immediate plans for a credit card until you have clarity from the RBI, correct? This payment platform, now please explain to me what this is because you already have an app, you already offer all your services digitally. So, what is this payment platform going to be? I know you said you're intending to launch it in October, right?
Mhm.
What is it going to be? Why is it going to change the way Bajaj Finance is perceived, the way you do business? This is the big reset you were talking about during COVID, right?
This is only one part of it. The reset is that the entire way that Bajaj Finance does business has become more and more digital. To do that, a lot of our processes had to be rewritten
Right.
to align them for the digital world. Secondly, a lot of the technology platforms that we were using, tools that we were using, APIs that we were using, had to be rewired to work in to work much faster, to work more intuitively towards the customer. The look and feel of that had to be upgraded, and that period of reset gave us a chance for to doing all that.
But that's all back end
Currently,
stuff.
over the
That's all
last
back end
over
stuff.
the last
Yeah,
2 years, yeah.
yeah.
But a lot of it is being rolled out right now. On the payment side, we've been working with some external partners. So, for example, our digital wallet is with MobiKwik,
Hmm.
and we last year got approval from RBI for our own prepaid for our own prepaid license,
Hmm.
and we've launched our own wallet now. Um, the integration of a digital credit card with a digital store card with the wallet and other digital payment options. For example, UPI, we know is clearly one. Working with our own merchant network, where we can then offer not only products to the end consumers but also to the merchants
Okay.
needs this platform which you can control yourself, because then it gives you the flexibility to build out the products and services in the manner that you feel is appropriate. And that's been a big differentiator for us at Bajaj Finance over the past decade, is not just the products that we sell but how we sell it, how we use data, the fact that we can do 100,000 loans a day virtually with 30-second approvals, the fact that we are doing all this and we are still reporting net loss numbers of 50 to 60 basis points post COVID. All this goes to show the power and capability of being able to control that information
Hmm.
and not only customer access but customer experience. And because end of the day, we're selling a loan or we're selling an insurance policy.
Yeah.
It is as basic and commoditized as that. Hence, the experience, the intuitiveness, the look and feel to the customer on the app or on the web, the ease with which they can get that support, whether it's a product or a service, is how customers choose. And having our own payment platform will give us that much more control, because payments is something that a customer does every day. Loan is something that he takes once or twice a year, and insurance policy even less often.
So, what will set you apart in payments from, let's say, any other payment service provider that your customers may be currently using? These habits are difficult to break,
Yeah.
which is why I'm asking.
So as you know, as I mentioned, with our digital store card, we have almost 20 million customers already on one of our apps.
Yeah.
So we have customers using us for multiple financial products even today. By getting our own payment app, it allows them to directly interact with us that much more.
Okay.
And it's a question of what kind of a rewards program would you have in place to attract the new ones to come to you, shift from someone else. So yes, there will be an initial cost to doing that for new customers. Existing customers already are on multiple platforms with us. We will integrate them into this new one.
So your operating expenditure has been sort of somewhat enhanced over the
Mhm.
last couple of quarters,
Correct.
and I think your guidance has been that you continue to invest in your businesses, including this particular platform.
Yes.
We will see this go on for the next few quarters at least.
Yes, I think the next couple of quarters at least we should see this before we start seeing the volumes coming out from them.
And how do we know whether this app, I mean, have you put in metrics in place for us to be able to judge as investors uh, whether this app or this payment platform is successful, not successful? Because broadly, it is about being able to use data to cross sell and to attract, right? So, how do we find out
So
that
Bajaj,
this is actually adding to your business in a significant way?
fair point. Bajaj Finance today runs its performance on between 2 and 2,500 parameters. And there'll probably be another 25 that'll get added.
Okay. All right, fine. Okay, 2,500 parameters, is it?
Yes,
Wow.
37 lines of business, and then operations and HR, rewards programs, debt management,
Okay.
analytics, risk.
All right. No, no, no. You don't have to list all of them. I get it. I'm going to wrap by asking you to wear your CI president hat once more. You put out a vision document
Mhm.
when you took over just a few days ago. A lot of it is long term, 10 to 40 years, and I get that. That setting the agenda for a country that's building out right now. But in the short to medium term, what are some of the key priorities that you would like the government to focus on?
I must say that we are working with a government that is exceedingly proactive, that wants to see growth back, that wants to see inflation down. And some of the suggestions with my press conference when I took on the president role, one of our requests to the government was to address inflation by cutting on duties on fuel. And not that because we asked them, they've done that, but clearly that was on their mind as well. So I believe we need to tame inflation.
We've also been
That's
asking them to do that.
maybe
As
they're listening to
journalists,
me.
and well, maybe as journalists, I think that that's the one question that the finance minister has been asked every single
Sure.
press briefing that she's held.
So,
So,
so, so
yeah,
she's finally heard you all.
whoever, but good,
And
yes.
so we have to tame inflation because this is what hurts the common man.
What more do you think needs to be done?
You know, I strongly believe that we have a very significant domestic consuming population. Over the last 2 years, other than those at the weakest income levels of society, the rest have not necessarily lost jobs. They may not have got big increments, but they've saved a lot of money. They want to spend now. We've seen that, as I've said, selectively over the next couple of quarters, or last couple of quarters. As long as they get a level of confidence that jobs are going to be secure and um, and inflation and costs are under control, they will hopefully go out and spend. That's what we need to do for the immediate term: is take care of that inflation. Um, but then we have to also put in the building blocks for the coming years. The changing geopolitics is presenting India with this very significant opportunity to scale up manufacturing capabilities not only for our domestic markets but for key export markets. Along with that, we are seeing the focus on climate. I mean, day before yesterday we were sweating. Yesterday it was rainy.
And
Today
today we're
is cold
freezing.
and it's so cold and cloudy. We know about the heat wave in India. The weather is changing. This is providing both a challenge but also an innovation opportunity, because every industry in India will have to
Yes.
change itself to become more green. And that's where we need to build on innovation capabilities in India. We don't need to keep importing innovation from outside of India. And we set up the next set of opportunities, I would say, in the green space. So I'm very clear sustainability is a very important area as well.
Mm.
And finally, I would say the time has come that we have seen IT and pharma do that, select other sectors. Indian companies have become internationally competitive. We have to have the confidence now to move into select markets overseas, build up an international presence for brand India.
Okay, fine. Medium term, that's actually not short term, right?
Medium
Nothing
term.
specific
Yeah.
to the
But you have
short
to start,
term.
no, no, but you have to
No,
start working on that. So,
fair
as I
enough.
said, beyond the short term is
Okay,
why it
all
is.
right. Thank you so much, Sanjeev, for your time here in
Thank you.
Davos. Thank you very much for speaking with us.